Hi there traders, Todd Gordon of TradingAnalysis.com. It is Tuesday and what a reversal today in stocks. Okay, there's a lot of fear, a lot of volatility, and I think a lot of people are jumping ship. I want to take a look at the charts and the charts of two specific indexes that I think are really important to what's going on right now. The NASDAQ and the Russell. Okay, tech and small caps led us on the way up. Now they're starting to lead us on the way down a little bit. And I want to take a look at the technical position of both indexes and see if there's reason to be afraid or is this just buying opportunity. So we're going to start off with an overlay of the S&P, the NASDAQ. We're going to look at the NDX 100, look at the tech as well as Russell. Okay, so as we dive in here a little bit, you're going to see that the white line, which is the S&P, is holding up relatively pretty well compared to the NASDAQ and the Russell. Okay, I'm doing a percent change off that early March high. Okay, so from there, I want to take a look at downside support levels in both the NASDAQ and the Russell. And I'll skip ahead a little bit and show you that they actually held today. And we saw a massive move back up in what they call Turnaround Tuesday. So let me get out of this chart and let me go to, I want to start with the NAS. Okay, so let's blow this chart up a little bit here. Full screen, bam, there we go. Okay, so NASDAQ 100. Now, without getting too much in the weeds in terms of Elliott, I'll tell you right here, this is probably not counted as a new, what they call impulse or downtrend. There's a lot of corrective price action, a lot of overlap. I think it's really kind of what I said, which is corrective. Okay, we've pulled back into some pretty key Fibonacci support here. All right, now we're looking at, I'll kind of pull this apart for you. I know there's a lot of lines on here, but I'm going to bottom line it first and tell you that this zone right here in the purple box, that's what you call support. Okay, there's Fibonacci from about 4 different price swings in the market to say that from 3,500 to 3,350, that is pretty significant support in the market. Further, we have this orange line right here, just the simple 200-day moving average, comes in at about 33.75. So I've done a lot of the Elliott Wave work for you, a lot of Fibonacci work for you, and there is a pretty good support zone there. 200-day moving average, plus we have that February 5th low, which is 34.18. So we have a pretty good zone, and you'll notice that this daily bar kind of had a big reversal back up. It's an outside bar. It's actually, it encapsulates the last 2 days of price action, so pretty good reversal. I'm wondering if that's not the low, we might have one more little test down before we might see a pretty significant move back up. All right, the other market I mentioned is the Russell. Let's look at the small caps, RUT. Really, this is a little bit more of a simple chart, but certainly just as important and just as clear cut in terms of its message. The Russell is testing the 200-day moving average, dripped, that works, kind of dripped below it, dropped below it. It also tested the 78.6% retracement of the rally from Feb up to March. Okay, we pushed below them intraday and snapped back into the close. So again, I think that is a pretty good reversal signal into key Fibonacci, highly visible, simple, elementary technical support levels. I'm going to be looking for follow through on the upside today. And I can tell you from the FX side of our business, we were actually long the yen. We've been long the yen for a while. That correlates very well to what stocks are doing. And that yen, okay, just would not rally today, kind of sold off into the close. So from an intermarket perspective and an Elliott perspective, we're looking supported. All right, guys, hope it helps. And we will see you on the next update.